Good morning, everyone, and welcome to the European crossover webinar. Apologies, I was just taking a look at gold. We almost come up, almost back to 38% off of this retracement, so was paying attention to that. But anyway, that being said, on the 38% retracement, just so you're aware, comes in at 1656.80. We'd actually made it to 56, so I just stepped away to get some coffee, but I thought that was going to be a good area to go on and step in and short again. So we'll see. But anyway, that being said, let's go on and take a look at where we stand here overall. We've seen the euro come back a bit here after it started out yesterday on the weak side. There we go, come back a little bit here. And as I mentioned, we did go on and start off a bit on the weak side yesterday, a bit on the defensive pressure. We are seeing cable come back a bit. And also dollar CAD had really got going despite Friday's sell-off, and we'll go on and get to that. But we had seen that bit of a change there also. And dollar peso had made a monster rally. I mean, it just actually just zoomed with dollar peso when we saw equities really coming under pressure late in the afternoon. We did go on and come off of that. And then dollar yen continues to stay a bit weak here. We have seen equities going and dip back a bit here. We can go and move into that. So we did make it all the way up to 32.58. This is a pretty good level here, that 32.58 here. I should look back on a dip back here. After we'd making that dip yesterday all the way down to the 32.20s, we'd come back up and we've kind of floundered back and forth here in this area here. We have gone and dipped back just a bit here, just focusing mainly on the S&Ps. SPOOs here, not SPOOs, but I mean the NAS. About the same layout picture, if you want to think of it that way here in the NAS. Take a look at gold. You can see here we've made a pretty good run back up here in gold. We actually had been all the way up in here at this 1660 area here, above it actually, and that was key resistance here at 1662. Look at this big old sell-off, and we rallied back up in here, but there's some good resistance here at 1656, but we are above the VWAP. And lastly, we'll just take a quick look at oil here. Same thing here in oil. We'd seen a run up here to $52, and then we've gone and pared back a decent amount, about a little over 50 cents here in crude oil. We'll go and move back into FX. Seen some pretty good movements here in the different markets. And we'll go in and take a look here on the economic. Did get some German data out, which came in rather weak. That GDP looked terrible. Look at that. Flat. I mean, just came in right here. Not much to go and hang your hat on here, to say the very least. We're seeing equities under pressure again, also there at their lows now. See if they can hold this area here. And then for later today, so we have Mexican GDP, CBI, distributive trends here in the UK, and then moving into the US session, we've got home prices, Case-Shiller, and Richmond Fed. And we'll take a look at some news. This is the loonies hit two-week low as rate cut bets rise on spreading virus. The Canadian dollar weakened to a near two-week low against its US counterpart on Monday as spreads of the coronavirus epidemic outside of Chinese raised expectations of potential Canadian rate cut. We're seeing the loonie get sold off and tread water as a result of the ongoing concerns around what a further spread of the virus would look like for global growth. Last month, Bank of Canada opened the door for interest rate cuts should a recent slowdown in domestic growth persist, and chances that the bank would ease at the March 4th policy climbed to around 30% from less than 20% on Friday. Canadian wholesale trade increased by 9/10 in December from November on stronger sales in the motor vehicles and motor vehicle parts, but analysts had forecasts of a 0.5% increase. Certainly, we saw that the dollar CAD from Friday, which was really looked like it was really going to come apart and then turn around and go, make a complete turnaround on Monday. And moving on. Australian New Zealand dollars find their footing, but risk persists. Australian dollar bounced from 11-year low on Tuesday, clawed back on some of the heavy losses from session lows as investors took some solace from the dip in the coronavirus infection rate. And we're seeing equities continue to press here. We're at new lows here on S&Ps at 3240. goes on its highs. And let's see, the Aussie liquid proxy for risk has fallen more than 1% so far this month, on top of a steep 4.7% in January in fears of a faster spreading economic coronavirus. Perhaps a slow rate of COVID-19 infections reported by Korea and declining rate of infection in China were the drivers. Coronavirus death toll climbed to 7 in Italy on Monday, and several Middle Eastern countries were dealing with their first infections. Wall Street Journal reported a possible vaccine is helping sentiment. It's difficult to say what's really driving markets. The only thing I'd say is, because of a deepening concern of the impact of the virus spread outside China, have increased the rate cuts by the U.S. Federal Reserve. And lastly, not much really in the news. We already know about all this stuff for the most part. The dollar checked its March high on Tuesday as investors sharply raised bets. The growing fallout of the coronavirus would prompt U.S. interest rate cuts. The Aussie dollar and New Zealand dollars were each about 0.2% stronger against the greenback. Overnight, there was a panic over the risk of the virus going global. Countries in the world are stepping up efforts to prevent a pandemic. Amid the turmoil, U.S. bond yields plunge. Expectations of rate hikes in the United States have vanished. We've seen repricing of Fed expectations. Against the basket of currencies, Japan Prime Minister Shinzo Abe said clusters of cases had emerged there and that the government would take stronger steps to fight the contagion. That's about it. So let's go on and move on. Let me pull out the we are at this equities got them at 32.37 on the S&P futures, gold at 16.57, by the way. Those are the markets that are really moving. But anyway, that being said, let's go and move on to the currencies. Euro traded lower in a tight range for much of the session. Once in the U.S. session, the pair expanded its range, closing higher. Resistance will be 890 with support at 811. So we're able to push up a little bit higher. So we're looking at here 890 on the upside, and the low side on support is going to be 811. Once again, I mean, we're not really seeing much movement in foreign currencies. I mean, we're just not. I mean, you got to look at other markets. I mean, maybe some a little bit in yen, but I mean, look at the massive sell-off we've seen in equities, and euro's asleep at the wheel. So. But anyway, it is what it is. So let's go move on to the cable. So cable spent the beginning of the week on the defensive, closing slightly lower in a tight range. Resistance will be 30.06 with support at 28.65. So once again, like I said, turn that down a bit. So we're looking at 30.06 on the upside. We had 30.05. Let's go to make it a 6 just to match up what we wrote. And on the downside, 28.65 might be a bit low right now considering we've started to move higher. We'll take a look on a 2-hour chart to see if there's anything there. Yeah, right here, coming across here. 29.23. That'll be support. 29.23. And let's go on and move into the Aussie dollar. So the Aussie was opened the week at new lows on the backdrop of the coronavirus concerns. The pair managed to close at the halfway point of its tight range. Resistance will be 66.52 with support at the lows of 65.84. So 66.52 on the upside. Remember, we have that weekly support level at 65.28. But we've got our support here at 65.84 for today. Those are the lows. 66.52 is the high area here. And with that, we're going to move into the Kiwi. So to start the week, the Kiwi opened at Friday's lows closing slightly higher from the prior session. Resistance is going to be the pivotal level of 63.83 with support at 62.88, and that comes in right down here, 62.88. But once again, like I said, we're just trading in a very tight range. We opened low at the week, came up a little bit higher, but right now, like I said, support's going to be here at 62.88. which we already had. And the key level up here is going to be this level right there, where we broke, which is 63.83. And let's go move into the dollar CAD. Now this one had some interesting movement because, you know, you can see here on Friday, we had actually, you know, here it's just been up and down, it's up, down, up, down. So we had this bar here on Thursday only to go in and just have this market thrash lower on Friday, but then we got Monday's rebound. And obviously there's some concerns that the Bank of Canada may go in and raise interest rates. I think we showed there that the percentage of increase has gone from 20% to 30% for, you know, coming up in, what was it, I guess in about another week and a half or so. But it says here the dollar CAD sprung higher on Monday's session despite Friday's weak showing. Resistance will be 33.38 for a closing basis that would extend a new high for bulls or extend a new leg for bulls. Support will be 32.40 for bulls to defend. So bulls need to go and make sure they defend that 32.40. So it's going to be 32.40 on the low side. And on the upside, 33.38. And you can see here, if we can get past that 33.38, which is up in here, if we get past 33.38 right there, that'll kick off a new leg up. So that's what we're referencing. Let's go move into the peso, which was a big mover. The dollar peso roared back to a major pivotal level, 1923.6, before paring back to close at 1907. A bottom has assuredly been placed in, but the range is wide and support comes in at 1896, followed by 1892 with the resistance at 1916, followed by the pivot. So we're going to have resistance here at 1916. We actually had that from yesterday already. But we did get as high as the pivot of 1923.6. And support we had for 1897. But let's see if we have to move that a little bit higher. No, that's perfect right there. Actually, we look how much we did even dip. Boy, this thing is, like I said, we've got a bottom in place, but the range was so wide. We even came down and came all the way down to 1893. But support is going to be right there, 1897. But you can see that, what an explosive move, all the way back up to the huge pivot, 1923.6. But then we turn around and come all the way down here to 1892 or 93 before we spring right back up. So it's all over the place. But certainly we've got, it looks like we have a bottom in place here. Let's go move into the dollar yen. So the dollar yen fell back to earth in light of the coronavirus-inspired equity slide. Resistance will be 1132, followed by 1163. Support is 1036, and we've actually just tagged that, or just about there, followed by 1013. So it's 1036, followed by 1013. We'll actually mark them both. And on the upside, we're so far away right now, it's going to be 1102. Obviously still bullish, but we'll see whether or not we can get some further traction. Key's going to be if we get a close below 110 is going to be key. Let's go move into the dollar index. So the dollar index began the week on the bid resulting from the safe haven bid. Once in the U.S. session, the dollar began to yield its strength, finishing in the middle of the range. Support is going to be 99.04, followed by 98.82. Looks like we almost made it there to 99.04, with resistance at 99.58. On the upside, We're just going to go with 99.42 on the upside. And with that, we'll go move into the cross rates. Take a look here at the Kiwi yen. We've seen the yen continue to go on and strengthen. Obviously, that's probably just going to go on and still continue to manifest itself. With me saying hello to someone else in the chat room. So this is a key area right here, and this 69.74. So we're going to go and use this, at least for now, as our support here. And on the upside, let's go and take a look at the 2-hour chart. Right there, 70.14. Take a look here with the yen. I should say euro yen. Same thing, seeing the yen continue to go on and strengthen. Support is going to come in right there. 1976. We're not that far away from it, but that's going to be our support. That's an area where basically it's almost like a make or break. You get it below that, you can really start to garner some momentum. So it's going to be 1976 on the downside. And on the upside, you can see right there, we're just going with the technical levels. We can push a little bit higher. This would be the key area for them to get. They could see a little bit of a snapback here. It's going to be right there, 2046. You can see that coming across from here to here to here, 2046. Let's move on to the euro odd. So we've seen the euro continue to advance on the backdrop of this weak Aussie. Probably see the same thing, probably similar case with the euro kiwi. We can take a look to see if there's any kind of confluence with the fib. So you can see here 68.40, 64.80, 86 is going to be the 78%. We'll go with that for our resistance. And for support, right here coming across here. Actually right there, 63.80, 63.80. Similar situation, what we saw with the euro Aussie, same thing here, and we're bumping up against this key level here, and that's going to be resistance, which is going to be 71.70. Support right there, you can see that coming right across here for them to hold. You can also make the case here, but it's here where it's make or break, which is 70.95, 70.95. Moving on to the Aussie yen, we once again the same thing. Yen strengthening. I'm surprised it's not even lower, with how weak the Aussie is. We're here at the 72.95. That is a key level here. We've taken it out by just a little bit. We'll take a look on a 2-hour if we can see anything a little bit closer. This can be right there, 72.78. And right here is going to be your resistance coming right across here, where they start to garner some momentum. 73.64, 73.64. Take a look here with the guppy. Same thing, obviously, with the yen strengthening, seeing this thing pull back, although it had made a pretty good run here. Resistance pretty clear as a bell is going to be right there, the 44.02. And you can see the support level right there. Just going with the levels. 42.66, 42.66. There we go. And let's go to Sterling Odd. We did see that dip here in gold. We did come off. We've actually made it all the way down here to 16.52. So we've rolled off about almost $5 from the highs. Yeah, $5 from the highs. So we're looking for that pullback. We're failure to 38%. Let's go and move on. So we've continued to move higher here with sterling odd, mainly because of the Aussie weakness. Looking at the levels, there's your resistance right there, 97.27, 97.27. And for support, going to be the key level right here. Coming across. $96.16, $96.16. And that's going to do it for the FX. Now we can move into some other markets. Let's go and move into some other markets here. Let's go and take a look here in the S&Ps. Okay, so we're dipping down here with the S&Ps and actually getting into some markets actually moving. We do see that pretty good dip here. Now, I did see someone posted, looked like Italy had something like 30 some more cases. I think I saw in there. I know right now, I just came across the wires right now, 34 more coronavirus infections in Iran. It's keeping the S&Ps under pressure. We did see this rally back up here to 32, actually 32.60. We came up here and tagged up in here, and we've already come under pressure here. If we lose 32.33, that's going to really push that momentum. It's already lower to start with, but once again, that's actually has provided some pressure. We saw that move right now into gold, where gold rallied up to 16, almost 16.57. We've actually come off $5. We were talking about that being at 38% there. We've come off $5, but you can see here where with the S&Ps really at a key juncture here, that 32.33, if we lose that, it's going to increase further momentum. Although you would think that potentially we can still go much lower here in the S&Ps. There's the outside chance that we can go for the yearly low, which is 31.80. I shared that in the chat room yesterday. There's a yearly low, 31.80. Support levels below is going to be 32.09, and then beyond that, 31.87. But the yearly low is 31.80, and certainly a potential. And you can see we came right up here to that 32.58. I had that marked off. We've already come off quite a bit. Surprisingly, it didn't spark, and it almost did spark a move here in the gold market. And we've seen a pretty good run here in gold. You can see here that we actually have a shooting star here from yesterday's daily close. And boy, did we take a pretty good dip here. If you look here on a 30-minute, look at that. We almost made it to 16.35. And then we turn around, we rally back up here. And here's that, what I was telling y'all right now is at the 38%. And we've gone and shed off $5 from that 38% here, which came in at 1656.80 off of the morning lows. We are above the VWAP here, so it's certainly going to work a bit as a magnet. You can see here we even continue to move a little bit lower as equities are trying to hold their own. It's opening the door for the gold to go and push back down here. We're going to move into the crude oil to finish things off. We have come off those lows here in crude oil. We actually made it all the way back up to $52, and you can see the continued steady fade in here. Trying to work up a little bit higher here. If you look at here on the 1-minute chart, get rid of this. There we go. So we make this run to $52. There's some good support coming in right there, which is 51.21. Actually, we almost made it to 51.21. So holding this area here, we're going to mark that off. Crude oil actually held up very well yesterday. I'm surprised that we didn't go sub 50 yesterday. It actually held up very well here, and you can see here we did take a dip, into the 50s, just below 50.50. I thought we probably would, as much pressure as we saw in equities, I thought we would have gone into 49 handle, but we did rally back up in here, run out of gas here at this 51.92 area here. There we go. Obviously, also motivated the Canadian dollar, dollar CAD, that is, with the weakening prices we saw here with crude oil. Last week we'd actually got above and closed above the 52, I think it's 52.82 area here, which opened them to challenge higher. But once again, with the way that the markets started out the beginning of the week, we certainly came under intense pressure. Once again, I thought we would have been with a $49 handle, but here we are starting to pair back a bit. We've already paired back quite a bit. Equities continue to go on and hold near these lows. Gold is already at 1651, so it's already shed $6 since we've come on air, and we were talking about that right when we came on air. But that's what we have for today. We'll see you in the chat room. Thanks for joining us here on the European Crossover webinar.